Alright everyone, welcome back. Now in today's episode we'll be taking a look at the dividends that I've received over the last few months. Now before I provide that update, I just want to state that people have a range of different ways that they can invest. So some people focus solely on dividend-based investing, others focus on growth. Even when you focus on different areas, so dividend investing for instance, some people have different opinions on what type of investments are sensible or not. So there's a range of different opinions out there. I just want to state what my goals are with the channel and the way in which I invest. It doesn't mean that as a viewer you should follow my style. But for those unaware, on the screen I have my dividend-based portfolio. This is an account which I just invest in dividend-paying companies, and you can see all the different companies out there. There are 54 investments and there's different weights that I have allocated. Now for the past year I haven't been putting much money into this account. The only money is the actual dividends that get reinvested. At the moment I've got £3 which I have yet to allocate to one of the existing companies out there. And the reason is because I've been focusing on specific growth-based companies out there, and I've been using the Lightyear app to do so. Now, as always, there's links in the description below if you're interested with all the different platforms out there. But my ISA account within the Trading 212 platform is just focusing on dividend-based companies where I reinvest the dividends, and that cycle continues. And if you look at the return, it's actually been pretty decent for a dividend-based portfolio. We have a return of over £6,000. That equates to a 22% increase from when I first started investing. And so there's going to be investors out there that focus purely on dividend-based investing. Personally, it's one of my favorite types of investing, but I don't hold the opinion that dividend investing should be where you allocate all of your money. As much as I like it, I still think there's value in focusing on growth-based companies as well. So on the one side you've got the dividend investing, and then there's individuals out there that focus on growth-based investing. To some degree they're polar opposites when it comes to investing, and I like to keep that separation just to make it clear what type of actions I'm making, whether I'm buying or selling or just holding certain companies, given that it's very easy to mix up the different types of approaches and which can lead to negative results. But sometimes that message can get lost. On the dividend side, some people want to just focus on high yielding companies, so anything above 6%, but that's a recipe for disaster because these types of companies are generally unstable. They're not going to be providing the long-term dividends and also the increase in dividends over time. And likewise with growth-based companies, some people can find themselves buying companies that don't have the long-term potential, and then they lose money that way. And so if we ignore the different types of investing strategies out there, the one thing we do have in common is that we are investing. The actual investing ecosystem is somewhat similar. So if you look at certain growth-based companies, a good example was that of Microsoft in the past, which then switched over to paying out dividends. So sometimes you can have a high growth company which then tailors off and then they become a dividend-based one. And so if I was just a pure dividend-based investor, I wouldn't look at the likes of Microsoft and only be willing to invest in that company once it starts paying out dividends. And likewise with a growth-based company, it may make sense that if a company is no longer high growth, then you should sell out your position. But equally, if the company is strong, does it make sense to sell out once that company starts paying out dividends? And so what we should be looking at here is that we should be investing in solid companies. Whether or not they're paying dividends, from an investment standpoint, it doesn't really make sense. That shouldn't be our focus. We should just be looking at solid companies. If you're maximizing for high growth, then you should be factoring that in your analysis and looking for those high growth stocks. And with dividend paying companies, you should be looking at those companies which will continue to pay out dividends. And look, if you want to have a more easier investment journey, and sometimes it can outperform picking individual companies, then putting the bulk of your money into say an S&P 500 is actually a very sensible decision. More often than not, the returns can outweigh what individuals like myself do when we look into certain companies and start to invest that way. And so with that said, I just want to show how the last couple of months have been in terms of the dividends being paid out. As a high level summary, to date I've had over £2,000 paid out in the form of dividends. It's difficult to see on a monthly basis what that actual payment is, but if we go onto my spreadsheet that I have, we can see that although August is still being calculated, to date we've got £93 in the form of dividends. July ended up being one of the best on record with £185. We'll shortly be taking a look at which company was paying out the most there. And then back in June, £117 paid out. And so some of the higher paid dividends out there, we can see the likes of AT&T. I have quite a lot of shares in that company, so naturally there's going to be more of a payout. We've got the likes of NRZ, which has actually changed their name to Rhythm Capital. Actually quite a high paying dividend out there. And I just said that people shouldn't be focusing on sort of the 6+%, but the last I checked, this is actually higher than that percentage. And then we can see the likes of Persimmon, that's over £100 in dividends as well. And so when we focus on pure dividends and when I actually track that back into my Excel sheet, in the short term, we are actually benefiting from some of the high percentages out there. I think Persimmon is around 10%. As I mentioned earlier, this isn't always sustainable. You don't want to have a high weight of companies that are paying out above 6% because that's dangerous for a dividend-based portfolio. Any of these dividends that I get paid out are reinvested, but there's definitely a lot to track here. There's over 50 companies that I buy in that provide me with dividends. It's near impossible to track that on a weekly, let alone monthly basis. And so there is inherent risk in that some of these dividends that I'm receiving now may not be as high in the future. And so let me know in the comments below, how has your dividend or growth-based portfolio been performing? I provide different videos. Sometimes I provide updates on dividend investing like I have done today, and other times I'll focus on growth-based companies or my actual growth-based portfolio. And so do let me know how your portfolio has been performing. New videos are posted each week. If you enjoy this type of content, then please do share with your friends. It really helps out the channel. Hit that thumbs up if you haven't done so already. And with that said, I'll catch you in the next one.
Stop, wait right here. Let me get you in the moment. Yeah, yeah. Hold up, freeze. Stay right there. Let me get you in focus. Yeah, yeah. Oh, I see.